Regular Insight Bureau recognized it right away as a valuable resource in planning and sustaining your retirement. She's Heather Foster, investment advisor and fiduciary. Well, we've been talking about taxes. Probably going to keep talking about it for a few more weeks because we've got what? It's February 21st today, right?
Yeah, so I got till April 15th.
We got another month or so, no, almost 2 months to keep worrying about it.
Yeah, keep planning on it.
Yes.
So what I wanted to talk about today was I've already caught some mistakes on people's. When they're bringing them to me, you know, my clients, I always tell them you bring your tax returns, even if you don't utilize our tax service, which we do have a CPA that comes in-house and does taxes, so everyone's offered that, obviously. But people who do the outside services. So I talk a lot about charitable giving, right? And once you're 70 and a half, you can give from your IRA accounts directly to your charities, and it's a tax-free event.
Right.
So it's the only way, in fact, you can get IRA money out tax-free. So, however, when the custodians give you your 1099s, they code it as a taxable event. So if you look at box 1, it's going to say the amount you withdrew, and then you're going to look at box 2, and it's going to show that it's taxable. You have got to communicate to your CPA or your tax professional that you, in fact, gave that money to the non-for-profit organization. So it's something that I see missed a lot. So people get on board with the idea of, hey, I can get money out of my IRA account tax-free, as long as it goes directly to the charity, but they're forgetting to tell their accountant that they did that. So your accountant can't see that, right?
They can't read your mind.
They can't read it.
Right.
They don't. When they get the 1099, if all they're doing is inputting in the data on the 1099, it's going to show that it's taxable, but in fact it is not. You need to show proof to your CPA or your tax professional that you in fact gave it to a non-for-profit. So that's costly. It's a fairly costly mistake. So if I see it, obviously, I'm like, hey, I'm sorry, but now you're going to have to pay for an amended tax return. We don't want to have to take people down that road. So this is just more of a reminder that if you are doing charitable giving from your IRA accounts, that you make sure that you let your accountant know that so that they do not code it as a taxable event. In fact, if you want to double check your tax returns, there's a little code that they put right on the front where it says IRA withdrawals. It'll say QCD, which means Qualified Charitable Distribution. So you want to make sure that you see that on there, that you're not getting fully taxed on those withdrawals.
And it would be an easy thing. You have the IRA or the 1099, and you just bring that receipt from the charitable organization. You put them together.
Yes, you put them together, but you do actually need to tell them that it came out of the IRA. So if you just give your receipt to your accountant that you gave to a charity, they actually will put it on your itemized deductions, which most people, as we know, because they've doubled the standard deduction, cannot itemize anymore. So it will mean nothing. You've got to make sure you tell them, hey, there's a correlation between the 1099 that shows that this money is taxable and the fact that I gave it to a church or charity of their choice. So we do a lot of this. The charitable giving contributions are extremely favorable for you to get money out, especially when you're already having to take requirement distributions. If you're already a tithe payer or already giving to non-for-profits, it is the best way to get the money out completely tax-free, but just don't miss taking the actual benefit of not having that money taxed.
It makes a ton of sense. But it's also a good thing to do. It's just one more reason why we ought to have somebody else
looking at everything.
Another set of eyes looking at it, because it's easy to miss.
Yeah, I mean, again, my clients are aware of all this, but I mean, if they go to another CPA and they forget to say something, I'm catching it then on the back end going, hey, so it is nice that if they use our tax services, because the CPA and I are communicating, so they actually know ahead of time, hey, I've got this client, they're doing qualified charitable distributions. Just make sure you don't miss it. We talk about how important it is that you guys do the charitable giving. Make sure you also get to claim it. And if you're also donating highly appreciated assets, so if you're donating highly appreciated stocks or mutual funds or assets, make sure you're also getting those numbers down so that you can make sure that you're not getting taxed on that because it was gifted or if it was given to a non-for-profit.
If somebody wants to have you take a look at what they've done, and wants that second set of eyes, it's just as easy as giving you a call.
Pick up the phone and call. Plus, obviously, we have a CPA and tax services at our office, so you're welcome to utilize our tax service as well. It's pretty reasonable.
Well, you should do that, and you should do it now rather than waiting till later, because it's just going to get busier. So give them a call at Foster Financial today, 234-2200. Check them out online, fosterfinancial.net. We'll be right back.